So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys, and welcome to another episode of the Investor Relations Real Estate Podcast. I'm your host, Jonny Cattani, and I am joined today by Agostino Pintus. Agostino urges people to rise above the outdated middle-class myth to achieve true financial freedoms for themselves and their families. Starting from modest beginnings, he is now a commercial real estate investor, real estate developer, entrepreneur, and public speaker that inspires high-impact results. He is the founder of two multi-million-dollar companies, a leadership platform, and a real estate firm focused on net lease, multifamily, and development deals. He is also the host of the Bulletproof Cash Flow Show. Agostino, welcome.
Man, thanks for having me on. Greatly appreciate it, Jonny. Happy to be here.
Absolutely. Very excited for today's conversation. We had a very nice off-camera conversation, went a little long, but that's okay. And love the setup.
Hey, thanks, man.
Those of you that are listening, I encourage you to go to YouTube to watch because like me, he has a real office setup that looks really nice, but very excited for today. A lot to get to. You've had an incredible story. So let's jump into it. Take us back to the beginning. You were in corporate America. Kind of take us there and what led you to where you're at now.
Yeah, absolutely. And I'll try to keep it quick because it could be somewhat long sometimes, but I was one of those kids. I started writing code. I was a computer kid when I was like 9 or 10 years old. I discovered the old Commodore 64, those old computers back in the day. And I fell in love with technology and computers. And I thought I wanted to have my own computer company one day. I wanted to do my own thing. And my parents, of course, discouraged me from the entrepreneurship route and really pushed me more towards go get a job, go work. It's safer, it's easier, that kind of thing. Causing me to ignore that entrepreneurial bug that I've always had. So that's what I did. I ended up going to corporate. I ignored the entrepreneurial bug, and I had a hard time in corporate. Meaning that you go work at a company, you do some great things. There's a shift, there's a change. That's one problem. The other problem is that it's not always your fault. Meaning you're sold a bill of goods at the interview. You get into the company, and it's a piece of crap company. They're out there. There's plenty of them out there. And it seems that I had a whole string of these companies, right? So a very rocky, I would say, experience early on in corporate America. I learned a lot, I'll tell you that. I learned how not to run companies, how not to treat people, how to do those sorts of things. But I finally did find some true success in corporate and when I went to go find some really great companies to work at and learn the right way. However, it's inevitable that whenever the higher up you go in the levels, the bigger target you have on your back. So here I am, I'm a CIO, so basically running large enterprise IT, leading up to, I'd say 2007, about 2007, just before the big crash, maybe even 2006. They of course, the company decides they're going to make another change. They're going to change directions, whatever excuses these companies come up with. And next thing you know, they hand me the box, get lost, pack your stuff and go. Even though I changed the way this company did business. There's no way they could have got to where they got had I not come along and fixed their business. But hey, that's corporate, right? That's the corporate life. And after going through something like that, a bunch of times, you really become disenfranchised with the whole corporate America thing. After that, I would often, sending up thousands of resumes before I find an actual job, and just rinse and repeat. I usually stuck around these jobs for a very short period of time, 9 months, 1 year, no more than 2 years. Fairly short. And the very last job that I had after it was a terrible after getting fired from that one job, back in 2006 and 7, falling into the wrong crowd, having just getting mixed up with the wrong people. Not wasn't a drug addict or anything else like that, nothing like that. But it's like if you surround yourself with the wrong people, they tend to take you down the wrong path, and that's what happened to me. You know, if you hang around people that have bad mindsets, then you get sucked into all that bad mindset. You know, and that's what happened. You know, I was here I am. I was a successful CIO guy, and then all of a sudden, now it's like I got mixed up with this wrong crowd, and it took me a second to get out of it. You know, it did, and finally, after doing that, I did land at another company, almost 10 years later, and I was able to fix that business. They had serious technology issues. I fixed the business up and had some good success there for a couple of years before the guy who hired me left. New CEO comes in, hates my guts because he wants to bring in his own guys. Here I am, get fired again. And here I am in my mid to late, or mid 40s, late 40s, something like that, or mid 40s. And so here I am, get fired again, right? There's nothing I did wrong. And it's like, you know, how many more times can I do this? How many times can I get fired? How many more times am I going to put the fate of my career, my family in the hands of someone else? That someone else could change on a whim either, right? You know, I decided, you know what, I'm going to do something else. I'm going to shift my whole life. And the one thing that was always consistent in my whole life was real estate. So back when I was working at that corporate job in the early 2000s, I did buy single families and small multifamilies, right? Nothing gigantic, but I had a bunch of these single family homes and small multifamilies, duplexes, stuff like that. And I still had some left. And it was always kicking out cash, no matter what happened in my life, no matter how bad it got, I always got a check, you know? So I decided to abandon a 6-figure career in IT to go do real estate. And that's what I did. You know, I told my girlfriend at the time, I said, I'm going to do one more consulting job and I'm never working for anybody ever again. That's it. I'm not doing this anymore. I'm unemployable. I've been unemployable since I was, 9 years old. So embrace it, accept it, and do it, so, and I'm not trying to poo-poo the whole job thing. I'm not doing that at all. It's not for everybody. That's all I'm saying. It's just not for me. It might be for some of your listeners. It might be for a lot of people out there. It's just not for me. And you know what? It's I really committed to training and to studying and to learning how to do multifamily real estate. That's really how we started the business, and with a focus on value add type of assets, fixing them up, making it better, making a great community for the people that live there, and really focusing on creating great environments for these people to live. And I also learned when I made this decision to focus just on one market, and then I chose Cleveland as that market, the metro Cleveland area. So when I made the move out here, it's exactly what we did, and it's been great. Now we have well over 1,600 units. We've built a development business as well. One of the assets I told you about in the green room is the Rockefeller Building in downtown Cleveland. It's a $135 million asset, just this one that I'm in right now. When it's going to be done, and we're going to turn it all to multifamily. And the third line of business is the net lease business, where we go and acquire Dollar General, Dollar Tree, CVS, Walgreens, stuff like that, in a fund. And we acquire them, we cash flow them, and we make a nice coupon for the investors, for ourselves, and everybody's happy. But we have other lines of business that we're working on as well. But we try to be very careful about what we're getting into. But first and foremost, it really comes down to getting into the right mindset, and which early on my mindset was broken. I was a broken individual. I got involved with the wrong people, and didn't read books, didn't follow through on the promises I made to others and to myself. And now it's like I'm an entirely different guy, and it's been all worth the while, man. It's been phenomenal life now. It's been great.
Awesome. I love that. Yeah. What a crazy story. Like an absolute roller coaster, a lot of ups and downs, a lot of great perspective in there. One thing, you touched on early on is no one's safe. I mean, you were an executive,
Oh, yeah.
C-suite, and still got let go. So, to those of you out there listening, we mentioned people actually do love their W-2 jobs. No disrespect to those people. Proud of you that you found something you love. I never could, Agostino never could, or at least, something that we wanted to keep going to. And so, there are people out there, but you may not be safe. So, don't be afraid to look other places and set yourself up. Obviously, I'm a huge proponent of real estate, building that wealth, right? You never know what's going to happen, even when you're all the way at the top. So,
Yeah, well, you know what, Johnny, it depends on what you want out of life. I mean, when I had that one job I was telling you about, I did have an employment agreement. All these things were built into this agreement to supposedly protect me and what I was doing. They used a technicality to get out of paying me. So it's like, just because you have an employment agreement, unless you have an ironclad agreement, then there's always a way that these guys try to find a way around it, and it's terrible, but this is one thing you learn in real estate. You better get good at contracts. All right. That's a thing.
That's showbiz, baby.
That's showbiz. That's how it is. But you know what, man, it's, I don't regret corporate. I did learn a lot. I learned a lot. We talked about this too in the green room, like how not to run a business, how not to treat people. I learned how to treat people, how to run a business. So, I mean, there's a lot of redeeming factors that I learned in corporate that I could not have learned even with my 2 master's degrees that I did. I would never have learned it there, So it has been a roller coaster, but now it's like I thought I was happy doing corporate, and I was busting my chops for like 12, 13, 14 hours a day working for this company, every day. And I'd always be like, I'd always get emails all weekend long, it's like, that might be okay when you're in your 20s and 30s, right? Do you really want to be doing that in your 50s? Do you really want to be doing that in your 60s? It's like, I don't know, man. I mean, I know I didn't, but I didn't know that until I didn't have the choice, until, like, you get your ass kicked out of the company, and what do you do now? So it's, I mean, now it's, we work very, very hard. The team works very hard to try to find the best deals we possibly can. And, but it's like, it's fun for us. It's fun. We actually enjoy doing this kind of stuff. Because now the stakes are high. We're all making money. The investors are making money. And we're doing great deals, and it's exciting. It's exciting, It's way more exciting to me than doing a rollout of some software, which is what I used to do before. So right. Again, I'm not trying to poo-poo IT or anything else like that, but it's like, it's like this better suits me than doing the other stuff. That's basically it right there.
Awesome. I love that. And there's no such thing as too late, you were still in your 40s working in the corporate world, and
yeah.
Now, and you can just hear it in your voice, how much happier you are and how much more fun you're having, which is really the best part, right? It is that fun aspect where, you get around like-minded people, like you mentioned, the wrong people can drag you down, and you get around those people and everybody has the same goals and ambitions, and you just feed off each other. And it's so much fun. And it makes you want to actually really that's what fuels me and makes me want to work harder. Certainly, there's other aspects, but you get around people, especially if you're not the smartest guy in the room, which you never should be, you get around someone who's, done it and is doing, work, not necessarily working harder, but has done more. And you're like, okay, now I got to do more, and it kind of, at least for me, is that fuel to keep pushing. So you kind of touched on something I want to get to, which is this building you're in. You're in the Rockefeller building, which I'm going to assume is not a multifamily building, but you guys are trying to get into one. Yeah. So talk about this project.
Well, it's funny because at the time I was living in Akron, Ohio, which is about 45 minutes south of here.
Shout
And
out to LeBron James.
yeah, there we go. You know, Cleveland was still it's still in the upswing. Like now it's crazy what's happening right now. I mean, literally 2 walls over, Sherwin-Williams is building their headquarters right across the street from here.
Wow.
It's going to bring in 6,000 to 10,000 jobs right next door. Okay. Now, when I bought this asset, okay, I knew that this is supposed to happen. Like I knew that it's kind of like a wink and a nod from our attorneys that, yeah, Sherwin-Williams is probably going to move there, wink, wink, you know, so I kind of already knew that it was going to go down. So I knew that we had to have this asset. The thing is, I didn't know at the time that as I'm driving up the street here, trying to find this, I put the address in the GPS, I couldn't find it. I'm looking around with my partner, like, where the hell is this building? We look up and there it is. It's huge, right? This building. This is where John D. Rockefeller built this building, right? And I'm like, oh my God, I got to get my hands on that asset. I have to do it. I got to find a way to make it happen. We had no idea how we're going to do it. At the time, I had no idea how we're going to.
Did a broker approach you with it, or how did you know it was for sale?
We knew because there was. So we have a lot of friends here in the business, in the real estate business, and there's a lot of. You have to know the right people, and the right people know what sort of transactions are taking place. And we kind of knew that someone was already trying to make a play for this building, but it sounded like they were going to have issues getting the financing and getting the ability to get it done. You know, and it sounds like it was about to hit the skids. So we kind of had a leg up on that. And but once we saw it, we knew we had to make this deal happen. Now, at the time, I didn't know that over the past 25 years leading up to that point, this thing they've been trying to sell this asset 30 times to 30 different groups, and nobody could take it down.
Wow.
The problem was that it was all these big groups out of New York or big groups from out of state or even local guys too. And the guy that owned this asset, he was a tough guy. He's a tough guy. And you really have to be, he's the type of guy that you can't stand up, get up in his face and make demands and put your finger in his nose and say, you better do what I say. He's not that guy. He'll tell you to pound salt, you know? I knew that because I had one meeting with the man. I figured him out. I'm like, I'm going to be as easy as pie. Whatever you need. I don't want you inspecting every single floor. No way. You can't do that. Fine. Don't care. I'm tearing the place apart anyway. Who cares, right? I mean, it doesn't matter, right? And he was like surprised. I was easy to get along with, easy to work with, you know, because we're so easy to work with, we're able to take this deal down. You know, it's that's the long and short of it. And I'm like this with all my deals, by the way. Every deal that I do, we're easy to work with. We don't retrade. We don't screw around. We don't play hide the ball. We don't. We say what we're going to do. We operate with integrity. It's a very big part of how we run our business. And so for me, it's like normal. But in the business at large, it's not always like that, unfortunately. It's not always like that. But if you show integrity when you're doing your deals, that's how you win it. And that's how we won this one. You know, this is going to be a massive, massive deal, not just for us and for the investors, but for the city. I mean, I literally just got off the phone with the gentleman. He actually works here in the office. He can't find a place to live down here right now. Like there's no inventory. You know, it's crazy. Yeah, it's crazy. Who would have thought? Cleveland, Ohio. Yeah, you know, he just recently found a place. He's moving in on Monday, and this is a brand new building. They literally just finished it. They're still working on it, actually.
Oh wow! So the conversion's almost complete.
And this other asset, not this one.
Oh, got it.
Another deal. But they're still building stuff down here. You know, so. But the point is that there's still plenty of room for growth in this market. You know, plenty of room for growth in this market. Still, it's a very exciting place to be right now. But
you guys are like Dallas 10 years ago.
Yeah, I think so.
You know,
I mean, Dallas is certainly bigger, but
right, yeah. But in terms of growth, you know, 10 years ago, Dallas was like 3% a year, and now it's, you know, obviously what it is. So a couple questions. Was this a historical building because it was built by Rockefeller, or in terms of like? Okay. So was there some red tape there?
No. As a matter of fact, this type of deal only works when you have historical tax credits, you have opportunity zone, you have tax abatements, you have other types of financing that really make it, how should I say, worth doing, you know. So it's the only way these types of deals work, you know, because it's an office building. It's enormous. It's over 300,000 square feet, right? It's big. So the only way the deal pencils, a deal like this, is to have all those tax credits. So, and the way that we do it is we have the historical tax credits. We basically sell off the tax credits. We take that capital and put it right back into the asset. You know, they have certain valuations depending on what they'll pay for it, depending on what the market is and whatnot, right? Yeah, I mean, you know, hey, listen, for a guy who started in multifamily doing very complex capital stack development type plays, it's totally different. It's very, very different, you know, but it's certainly it's very exciting. And the upside on doing these types of deals is definitely worth the headache. I'll tell you that. It's worth it. So worth it. So much fun.
Fascinating. That's a very, very interesting deal. I actually, well, I mean, he's not on retainer or anything, but the lawyer that I use also delves in the same asset class. They do historical buildings as well. And he mentioned the same thing when I asked him about those tax credits kind of around it, which is fascinating. So what is that process like? You know, what are those credits and how they work?
So the credits are only in place for obviously buildings that have some sort of historical significance, right? So in this case, it's an easy thing. John D. Rockefeller, right? For those that don't know who John D. Rockefeller was, if you've used gasoline today in your car, chances are you probably did. John D. Rockefeller was responsible for gasoline in your car, right? He was the guy that came up with that, along with a whole lot of other stuff that during the industrial age really helped propel the United States into a superpower, right? Petroleum, oil, he was an oil man, right? And most people don't know it, but he's from here. This is where it all started. It's here in Cleveland. You know?
Okay.
And most
That
people
explains
know
why he built that.
Yeah, most people are aware of Rockefeller Center in New York City, right? When he left here to go to New York, that's when he built that, right? So, but not to mention too, some of the other historical aspects of this. It says Rockefeller on the side of the building here. It's actually in the deed. That the Rockefeller family put it in the deed that name cannot be removed for as long as this building is standing. That name cannot be removed, right? And because it's a historical asset, this building can't be removed. So there you go. That name is always going to be there, right? So, but anyway, there are certain elements related to the property, the facade, the look of the interior, the stairwells, for instance, are all marble and have this iron clad that goes all the way up 17 stories.
Wow.
But all that stuff cannot be touched. You know, because it's now historical, right? If you want those historical tax credits, you have to keep all the historical elements of the property. You have to keep them there, refinish them, or bring them back to life. You know, so it's beautiful. Why wouldn't you want to do that? You know, so I mean, that's what we chose to do. There's another building nearby that the owner of that building, he wanted to make it in the way he wants to do it. He's got tons of cash. He didn't care about historical tax credits. He just did whatever he wanted to do to get it done, right? There's guys that do that, and there's guys that don't, right? For us, to maintain the historical elements was very, very important to us. You know, I think to recapture some of the historical elements is going to be great for the building, great for the city, you know, great for the people that are going to be living here. So yeah, we're super happy, super stoked to bring all that stuff back to life. It's just going to be phenomenal when it's done. It's going to be great.
Yeah, that's cool. Wow, what a fascinating project. So obviously a very heavy lift, right? You're taking it from office to multifamily. What, I guess, in order to keep those tax credits and whatnot, you got to keep the staircase, kind of it sounds like the integrity of the building has to remain the same. Are you gonna kind of keep that historical vibe in the units as well, or what is that gonna look like?
I wouldn't say we keep it in the units themselves, like, because people do like running water and electricity.
Yeah, fair. So there won't be a well out back. Dang it. Okay.
All right, there's no well in the back or anything else like that. So we get your own water. No, nothing like that. I mean, but there's certain elements that we do plan on keeping. It's interesting you should say that, because there's a couple floors, for instance, that have the old doors from the offices. If you've seen any shows from like the 50s and the 40s, picture the glass, or like a door with a glass in the middle of it. You know what I'm talking about? It has a name or a number on the glass, right? It looks like a frosted type of glass. We're thinking about that as the interior doors for the individual units, with the old style. Well, we can't get too creative with the doorknobs, because you have those L-shaped doorknobs now for ADA compliance, right? So there's still round doorknobs in this building from the original ones. Like they're
Holy cow.
intricate designs and all this really cool stuff, right? Clearly we can't use those, even if we wanted to. It violates ADA. We can't do it. But I would have loved to use those doorknobs.
Any hauntings or any ghost sightings or anything like that?
Well, John D does have a tendency of stopping the elevator at floor number 2. He does do that. He does.
Really?
Yeah, he does.
Fascinating.
And when the door opens, I say hi to John, and then the door closes and continues up to the 4th floor.
Wow.
So, yeah. There's nobody there on the 2nd floor, by the way. That's how I know. That's why it stops. It's like, must be John. John's saying hi.
Wow, that's wild. That's so cool. I mean, cool as long as it doesn't mess anything up. But
yeah, I know. John's a peaceful guy. He's a
yeah, good. Oh, good. Okay, good. He's peaceful now that he's gone.
Right. But it's kind of cool too, because there's also a lot of there used to be like an underground, I'm not going to call it a subway system, but like an underground system of tunnels underneath Cleveland. One of those tunnels actually came to this building, and it goes to Terminal Tower, which is a couple blocks away from here. It would be nice to open that up again and somehow have a tunnel that goes from here to Terminal Tower, because Terminal Tower has a lot of really cool amenities. There's a whole casino there, actually.
Oh, wow.
But I don't know that we're able to do that, obviously. But that would have been something really, really cool. But yeah, it's there. You can see that it's there. It's just been blocked off, So it's kind of cool. It's kind of cool that it's there.
What's the turnaround time for a project like this? What's the estimated?
Yeah, it's going to be 22 to 24 months. So it's going to kick off here in Q3. So fairly soon, a few months here. We're just finishing off some of the financing components here. Things are definitely slowed down due to COVID. I'll tell you that.
Yeah.
But now that's out of the way, the intent here is to get things kicked off fairly soon. So yeah, it's going to be very, very exciting. Very exciting.
What was it like on the capital raising side? Did you have a pretty, I guess, smooth path? Like were a lot of investors really excited and kind of jumping on it, or was it a little bit of a tougher raise?
I think that nowadays it's easier for us to invest or to find investors for development deals. Okay. The more deals you do, the easier it becomes. The first deal is always the hardest, right? And this was one of our first redevelopment deals. We've never done a redevelopment deal up to that point. So for the investor pool, it was certainly a very different type of investment for them. So that's a good lesson for folks even getting into this business right now, is that the first deal is always the hardest. It's going to suck, 100%. It will suck. You just got to fight through it and get it done. So certainly the nowadays for us to raise money for these types of deals is way easier. This one it did take a little longer than we would have liked, but we did get it done, obviously. But it did take a lot of work. It did take a lot of work, But in the end, it's going to be worth it. I mean, you have to do development type of deals. You really have to have a vision of what's going to happen. And if someone were to come out here right now, it's very hard for them to understand it and see it. But when you understand the plans that, like Sherwin-Williams, for instance, right next door, what they plan on doing, this whole area is going to be revitalized on the street right next to me here. There's going to be all new storefronts on that side and on our side of this very building. All new storefronts are going to be there. We're talking to different groups about reutilizing the space behind the building here, because we got this giant parking lot sitting back there. Further down, it's already all revitalized. So it's like this whole area is going to be totally different in the next 24 months, but for an investor, first time hearing about the deal, that may be coming in from investing from Texas, they have no idea. They don't know what this means. Now that the investors that are in the deal, they're following what's going on. They see what's going on next door. They see that there's cranes in the air, and Sherwin is 100% committed to building. It's like now they see it. Now they get it. Now they're happy they invested. So it's one of those things. As a developer, you really have to have the vision. You have to know what you're doing when you're getting into these deals. You got to know that the deal is going to perform. And that's something I've always done. I've always done business that way. I never speculate. I never get into overpaying for stuff. With like there's guys buying stuff in Florida right now, 350, 400,000 a door, rents at $1,200 a month. That deal doesn't cash flow. I don't even need to do the numbers. I know that deal doesn't cash flow. It's like,
it hurts just
and
to
then
hear.
and they're hoping and praying that somebody's going to pay $450 a door, in 12 months from now. Or it's like, that's hope is not a strategy.
Nope.
It's not, and I don't do deals like that, and that's just not what I believe in. It's just not, I want to be able to sleep at night. I want to be able to promise my investors that we're going to perform for them and we're going to do good work for them. That's ultimately what it is. It's a big deal to me. It's a very big deal to me.
Absolutely. Yeah. You can only raise money for so long if you're not doing good deals. I mean, that's eventually, your investor pool is eventually going to run out. One thing you mentioned, it's easier now to raise for development deals. Certainly a big factor of that is the fact that yield is being constrained pretty much everywhere else. That's why I like self-storage, still some good yield there. Working on a development self-storage deal as well. Same reason. A, the market needs it terribly bad, and B, that upside, but you have to educate your investors so they understand, this is not a cash flowing asset from day one or even Q1. You're looking at, 12, 18, even 24 months potentially, to stabilize, right? That's even after you've completed the project. So definitely, it requires some extra education, helping investors understand, if you're looking for cash flow, this is not the deal for you, but that upside, and it will come, of course. But wow, that's really awesome. And so what I want to do is you mentioned that you don't speculate, kind of some perspective that you have.
Yeah.
We talked about how, you left the corporate world. What do you have for those, like, kind of advice and some nuggets for people that are in the corporate world? Maybe they're looking for something else, like, you eventually did, like I did, or they're new to this, as we're facing economic uncertainty and some things are uncertain. What advice do you have for some people who are just starting out to kind of point them in the right direction?
Well, a lot of different thoughts come into my mind as you ask me that question, because I think, the older you get, the more you realize you're running out of time, right? And you really have to figure out, in your heart of hearts, what do you really want to do? Do you really, truly want to be living life the way you're currently living it now? And maybe it's fine, maybe it's not, I don't know, right? But I know that in my case anyway, it was just okay until I realized I'm living in fear the entire time. I was always living from paycheck to paycheck, even though it's making very good money. You find a way to spend it. The more money you make, the more you find a way to spend it. And, going through life, TGIF, praying for Fridays and dreading Mondays is not living life. It just isn't. It just isn't. And it doesn't matter what the economy is. Honestly, the economy exists in your mind, really. I mean, there are, of course, some real things that take place in the real world. I get it. But at the same time, too, it's like, if you really want to make a change in your life, you're not getting any younger. You got to do it, and if you really want to get into this business, okay, fine. You know what? Buying a multifamily may not be your bag. Maybe you can't do it, but you can certainly invest with someone that maybe has the experience. Maybe, and you know what? Right now, we're doing more development. I mentioned that in the green room. We're doing a lot more development than we are acquiring stabilized assets because it makes financial sense to do so, right? It makes financial sense to acquire decent assets in great markets. I don't speculate. The deal I'm doing right now, we actually did a capital raise just today, just before this call, actually.
Oh, wow.
And we're raising money for a deal that is literally a block away, less than a block away from Cleveland Clinic, one of the best hospital systems on the planet. And we're going to build 77 units right there. I'm not speculating. That deal is going to fill up quick. All right. I already know it is. That's no guesswork. I'm not building 300 units in the middle of nowhere in Cincinnati. I'm not doing that. People are doing it. I'm not one of those people, right? The point is that your life is short, okay? And you really want to do. You really have to ask yourself: do you really want to do what you're doing right now, or do you really want to live life on your own terms? And it's something I wish I would have asked myself, and actually took action on a long time ago, instead of waiting until I was in my 40s before asking myself that question. Because up until that point, I was living in fear every single day. There's no way to live. That's no way to live. And maybe the message will resonate with you. Maybe it will. Maybe it won't. I don't know. It's kind of hard, but I tell you, it was tough making that decision. I would do it again in a heartbeat. 100%.
Yeah, absolutely. It's hard to say. Sure. I guess the structure, right? Like, you show up and you're supposed to do the tasks are there for you. Meaning when you have a W-2 job, typically, right? You get there, you work on a project, it's all there for you, right? So it's like, you go to work and then you're done, maybe some extra here and there. Well, usually a lot extra, let's be honest. But at least it's defined, I guess, right? Like, what you're supposed to do, the projects are given to you, you know how to complete them, blah, blah, blah. Whereas, when you're starting a business, sure, you can get mentors and things and they can point you in the right direction, but ultimately you have to take the action to do those things. You have to call the brokers and make the broker relationships. And that's frightening, to people.
But you know what though, Johnny, is that there are other ways of doing this, right? It's like, if let's say, for instance, you are working in corporate and you still want to have some freedom down the road and you're earning decent money, you can always invest in deals too. That's another great way of getting into the real estate game and not having to leave your W-2 if you don't really want to. Maybe you're happy doing it. That's perfectly fine. You know what? You can take that cash, roll it into a deal, and then eventually deal number 1, 2, 3, 4, and so on. You cash out of those deals down the road. And then maybe you can enjoy your freedom at that point, if you want to, right? The whole point of it is that money creates options. Money creates options. And if you're not investing this money wisely, you're reducing the number of options you have for yourself and for your family. Ultimately, is what's going on. So, and I wasn't doing it very well, honestly, myself. Early on. I did, because I didn't know. I was living the way everybody else was living. I was taking the money I was earning and spending it, and then wait till the next paycheck and doing the same thing. I wasn't taking that money and investing it in multifamily, which I could have easily done. Easily did it. I didn't do it. Did a lot of dumb things with it. bought cars and bought all kinds of Mercedes Benzes and Corvettes and Hummers and all kinds of stuff, man. I went crazy. I would never do that again. I would not do all that stuff, man.
Yeah, unfortunately, those are not cash flowing assets.
They're
So
not cash flowing assets. I could have easily bought a multifamily that would have been paid off by today. It would have been paid off and it would be kicking out 30, 40 grand a month, and
yeah,
whatever. Lessons learned, right?
absolutely. Awesome. I really appreciate that insight though, because I know there are a lot of people who struggle. I was one of them. I struggled with that for sure. I had an entrepreneur in my family. My grandfather's grandparents started a very successful construction business, still in the family today, but he didn't, not to get in family dynamics, but anyway, I didn't, right? Like my parents were very much go to school, get a job, just like yours. And I kind of just always had this bug. And finally, I'm just like, and even now they're still like, I don't know what you're doing. And I'm like, yeah, me either, but we're doing it. Cool. Well, that brings us to the final 5. I've got 5 questions I ask all of my guests. First question, best advice you've gotten from a mentor?
Wow. Just take action. Take action. Don't wait. Take action. Figure it out later.
I love it. What is it about your career that makes you feel like you're fulfilling your why?
There is, like I said, this is the 5th year now that we're doing this real estate thing. And I truly enjoy what I'm doing when we are sending out checks to our investors. It's kind of like, I knew the deal was a good deal. I knew it was from day one, and I get into the deal. It's like, I feel like it's a great deal. Then to top it off, here to give the investors some their return that you promised. Love it. I love it. And they get their return. I make my money. Everybody's happy. It's phenomenal. Just got one today. It's great.
Love that so much. Yep. Helping people build that wealth, man. It's really awesome to see, for sure.
Yeah.
Favorite non-real estate or investment related book?
Oh, non-real estate. Oh, wow. I was saying The Shortness of Life by Seneca. That book changed my life. That book really was instrumental in setting me on the right course to understanding that well, Seneca would say that we have just enough time on this planet to do what we need to do, right? That's true, of course. But I would also add that our time is limited here and life is fragile, and you should really try to spend it, invest it, not like, like an ROI, but invest it in a life that's worth living, and living in fear and living from paycheck to paycheck is not the way to do it. That much I do know. I don't know what the right answer is for whoever's listening, but I do know it's not the answer. Not the answer is. So.
I love it.
Yeah.
That's awesome. Yeah, really, really great insight there. If you could have any superpower, what would it be?
Any superpower? To fly, man. That's what it would be. Just to fly. That's it. So I do want to buy a plane. So it's gonna be the next best thing.
Do you have your pilot's license?
I was, I'm starting it. I am going to be starting it here soon. So
cool.
It's a huge time commitment.
Yes.
So it's a matter of I'm clearing the schedule right now. I have like 3 other development projects that I have to launch. So I think that once these 3 development projects come a little closer, then I'll be able to commit the time to do the pilot's license. But
are you kind of the construction management side? Like, do you manage the?
No, I'm a developer. Yeah, I'm the guy that actually puts the whole deal together.
Okay.
Yeah.
So you are the on the development side.
Stuff, son.
So are you the GC then on all the deals, the development and everything?
No. Geis is basically the GC. Geis is a very large design build shop, right? What they do is they will design the site, right? They will get the permitting, help you with the lending, if you can, like, not actually lend on it, but find the lenders for you, build it, PM it, the whole 9 yards. They do the whole thing. Awesome. They'll even handle the interior design if you want them to. They'll do the whole thing from soup to nuts. So it's typically more expensive to do things that way. It really is. But in return, you get an asset that is turnkey and complete.
Gets done right.
It gets done properly. It gets done right, and it gets done on time. Because here's the thing: if that asset is not built on time, you look like an idiot in front of your investors. Okay, you're losing rental income, right? Because you're in your projection, you're going to project that this is going to get built in October, or it'll be done by October of whatever this year is. If that's the case and it's not done, what happens? You look like a fool, right? You must never let that happen. You must never let that happen. So, and when I say it's a little more expensive, and I'm not saying it's like millions of dollars more expensive. There is a differential, but it's certainly worth doing it when you have one group that's responsible for the whole thing.
Couldn't agree more. And then on the lending side, them developing those relationships too, and then lenders seeing their name on the deal, they're like, okay, we feel more confident. So that's some good input there. For sure.
Lenders love it. Yeah, they love the fact that we work with guys. They know guys, they know the brand, they know the people there. It's a very easy sell. Yeah.
Awesome. I love it. Cool. Last one. What's the best way for people to get a hold of you and learn more?
Bulletproof Cash Flow. If you Google Bulletproof Cash Flow, you can come to our website. We have a YouTube channel. We have a Facebook group. We have a Facebook page. We have all kinds of ways to get a hold of us. Yeah, definitely reach out.
Awesome. We'll link down the show notes. Agostino, thank you so much for all of your insight. This has been incredible. I really appreciate it.
You bet, man. You bet. Thanks so much.
Absolutely. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.